If you're on a variable rate mortgage, you can be excited. For the second time in a row, back-to-back months, we have received a 25 basis point reduction. What does that mean for you? Stay tuned. We're going to break down the latest articles here that the Bank of Canada has just come out with. Are we going to see more rate cuts in the future? Potentially. Stay tuned as we break that down for you here. My name is Mike Carpino. I break down news articles and what is relevant to you in the Greater Toronto Area. If you're looking for market updates and market analysis, we've got that on the channel as well. And if you want to discuss real estate one-on-one with me, feel free to text me at the number here on screen. We can dive into any questions that you personally have. So today we have great news. 25 basis point reduction has happened yet again by the Bank of Canada. Not going to make you sit around and wait while I chat about it. So let's look at the article here we have at CTV and see what they have to say. So the Bank of Canada, for the second time in a row, has reduced its policy rate, signaling more cuts are to come if inflation continues to ease. 25 basis point reduction brings the overnight lending rate to 4.5%, returning to levels that have not been seen since 2023. Great news for all the variable rate holders like myself. Last month's cut from 5% to 4.75 was the first cut in 4 years. This is obviously the second cut that has happened in 4 years, but it's nice to see back-to-back cuts bringing us to 4.5% as the overnight lending rate. So the Bank of Canada Governor Tiff McCallum has said that the decision was based on the economic data showing slack in the labor market, excess supply in the economy, and inflation continuing to drop. We are increasingly confident that the ingredients to bring inflation back to the target are in place, McCallum said in his opening remarks. Since the Bank of Canada started raising rates March 2022, inflation has dropped from the peak of 8.1% down to 2.7% June 2024. After a slight increase that did happen in May, and that's when we were kind of hesitant to see if we would even get our first rate reduction, but things panned out, we did, and now we have got our second rate reduction here. Looking ahead, we expect inflation to moderate further through process over the next year and will likely be uneven, says McCallum. If inflation continues to ease as expected, McCallum signals that Canadians can expect more rate cuts. Those decisions, he said, will be taken one decision at a time. And if inflation continues to ease broadly in line with the forecast, it is reasonable to expect further cuts to the policy rate, McCallum says. The timing will depend on how we see these opposing forces play out. Many economists and big banks expect that the Bank of Canada could cut rates 4 times. So we've done 2, potentially maybe 2 more quarter point reductions, bringing us to full point reduction, which would be nice for the variable rate holders by the end of 2024. The speed of these cuts is going to depend on how quickly the Bank of England and the Bank of United States Federal Reserve do their rate cuts as well. Last month, the Bank of Canada became the first in the group of 7 central banks to do the reduction since the pandemic began. Central bank expects broad inflationary pressures to continue easing, with the bank's preferred measures of core inflation now consistently below 3% and expected to slow to 2.5% in the second half of the year. Its monetary policy report and central bank highlights concern that inflation is being held up by high shelter costs driven by the rent and mortgage interest costs, as well as by services that are closely affected by wages, such as restaurants and personal care. While few details were provided, the monetary report warns that housing market imbalance will continue to put upward pressure on inflation throughout much of the projected horizon. So we are carefully assessing the downward pull on inflation from ongoing excess supply and the pressure from shelter and other services that are holding inflation up, McCallum says. Monetary policy decisions will be guided by incoming information and our assessment of their implications on the inflation outlook. So the next rate announcement or rate assessment is on September 4th. So we get a month off here in August for us to take a deep breath. So if you're on a variable rate, you're now saving likely over $100 a month from what you were in June. So this is nice. You're going to save yourself about $1,000 a year, if not more, depending on your mortgage size, of course. So this is positive for you moving forward. What does this ultimately mean, though? As we see these small rate reductions, it is something that is positive without a doubt. If you have a variable rate mortgage, any additional money that you can save or maybe even put towards the principal of your property is good for you. But is it going to move the needle? Is this 25 basis point reduction going to move the needle when it comes to the real estate market and activating all of the slow and lagging sales that we have hoped to see over the past few months? Ultimately, we didn't see much happen. on the first rate reduction. That 0.25% didn't move the needle like me personally thought it would, and I don't think we're going to see the needle move much here on the second time either. I think people are going to be very hesitant still, hoping as we get closer towards that fall market, maybe we actually see a traditional fall market where things pick up, we get more activity on the selling and the buying side. But I think we are still in the summer market, which has something in it itself. The summer market is always slow. People are traveling, enjoying themselves. They may not even care about this news that the Bank of Canada has done, in fact, another rate decrease, especially if it's just another quarter point. And for some who have a variable rate, this is going to be most impactful for you. You're just going to appreciate a little bit more savings in your pocket or a little bit more money to put on the table for your family. But somebody who's looking to buy a house today, you're going to be qualifying at whatever the lowest possible rate is anyways, and that's likely just going to be a fixed rate. So this doesn't really allow your affordability to go up in any sense. It doesn't mean that all of a sudden you couldn't afford something last month and now you can. So it's not really a needle mover yet. Should we, like Tiff McCallum is stating here, get a couple more rate reductions or see some more progression in terms of the rates getting lower, then the buyers might come back out and we might get a little bit more activity in the market. We have to have the fixed and the variable rates getting closer together when it comes to that original number that people are going to be qualifying at in order to have more options for them as a buyer. If you currently are looking to get pre-approved, the bank might say, hey, we can give you a fixed rate at this or a variable rate here, but you may not even be able to qualify with the variable rate still because you might be in that mid sixes range versus a low fives range on the fixed side of things. So ultimately, this is not going to do much for you. We'll have to just wait and see. This is not as exciting as the first rate reduction, of course, but it is beneficial. If you're on a variable rate, you know, take a silent nod, be a little bit excited for yourself here. But if you want to know ultimately how this is going to affect your local market, if you have condos or houses that are not moving today, they're likely not going to start moving tomorrow just because of a 0.25 rate reduction. It's not that much of a needle mover. If we see a few more rate reductions, then we'll start to see houses move a little bit quicker and the inventory get to levels where it's a little bit more balanced instead of just a very heavy buyer market that we still do have right now in a lot of places. If you want to chat real estate, shoot me a text message. Numbers here on screen. We can chat about what is next for you or what questions you have in the Greater Toronto area, all the way out to Waterloo. My name is Mike Carpino. This has been a quick breakdown of the recent rate announcement here from the Bank of Canada. Look forward to chatting with you guys in my inbox here. Have a wonderful rest of your day. Bye for now.